What's going on, guys? I hope you are doing well today. Just wanted to cover Bitcoin with you all. I'm going to get started with it. Alright, as you can see, we have 2 hours left until this daily candle closes right here. Hollow candle means bullish candle. And we also are getting a buy signal, which is rather interesting. I'm going to go to the market cipher Hikinashi representation. We do have a lower negative money flow than before. I don't like to count my chickens before they hatch, so to speak, so I'm kind of just look at this with like a cautious optimism. Um, from the candle pattern perspective, we do have somewhat of a rising channel possibility that's been playing out for the past week. We do have this pretty defined borders here. If you go to the 1 hour, this is more so a 1 hour representation here from candle close bottom to candle close top. It's been respected, so until I see anything break from the inside or outside of this channel, I can't necessarily be optimistic with what the indicators are telling me, frankly, until I see a break outside of that channel. So here on the TSI, on the daily, we are getting a curl. The fast moving average is going from gray to green, so that's rather interesting. Now, keep in mind, there are times where things like this do occur, where you have a curl, then you have, a sell off, then you have like a lower high attempt here, then a lower low, then you see, really on the daily perspective, I want to see what the slow moving average color is as opposed to the fast moving average, and at this time negative sell pressure is kind of controlling the market. What else here? Okay, I'm going to go to the daily MACD. Daily MACD is showing waning histogram momentum from the downside to the upside, so that's interesting. Now, the histograms here are contrary to the indicators because they just cross the zero line. At this attempt, we are seeing some dichotomy and consolidation, which is kind of interesting. But yeah, from the TSI perspective, as long as price is below 21.9 flat, 21.908, basically $21,908. You can expect price to continue going to the downside. So as you can see, this moves daily. That's why I like the TSI, because like it's actually a moving line in the sand, if you will. That is always something to keep your eye on. So I'm going to go yellow, then I'm going to type in the parameters here. There you go, and right there. So as long as price is below there, you have to expect potential downside. Now, price could pump all the way up to there. As it currently stands, that is about 1.6% above here. But as you can see, for the past couple days, like this has just been kind of moving lower and lower and lower and lower. And you know, the price itself has just been stagnant. So this is kind of something I'm keeping an eye on here. But yeah, that's just a key line. If you see a daily candle close above that particular line, then yeah, I would be a little bit more bullish. But at this time, we are in limbo land because we are consolidating within a bearish pattern, right just above support that created this bounce. Now, this bearish engulfing candle here is a huge elephant in the room, because bearish engulfing candles, unless they're taken out, meaning that we see consolidation and a break to the upside to break above this bearish engulfing candle, this bear move does not get nullified until instances like that occur where we see like a god candle, green god candle. But unfortunately, we did see the red candle break as this line, this support line did break. So once that was an obvious, I believe it was the hourly. Essentially, we had a lot of time. Yeah, it was the hourly. Yeah, when we had an official hourly candle close right here, then it was all stops. There was an attempt to, buyers right here, pretty weak. They were trying to push the price back up above here, but it was just too late. And once people realized the situation, we had this like huge sell-off right here and a continuation, and even some well manipulation down here. But yeah, we realized here from a just a market perspective that basically 20.96 to 20.83, this green horizontal box right here, that's just support for now. So until we see a breakdown of this particular zone here, I wouldn't necessarily be too confident opening up shorts. There's some, especially in the hourly time frame. I know I skipped a lot of stuff here, but on the hourly time frame, there are some forms of like wicks to the downside. You gotta wait for specific candle closes and all that kind of stuff to actually initiate any future longs of any kind. But okay, let me go back to daily indicators because I stopped the TSI. So on the daily perspective, we are seeing not just one but two bearish divergences continue to play out. The slow moving average, this red line here, is starting to curve a little bit. I do like seeing curvature because when these start to curve, then you have an opportunity for contrarian scalps. We don't have a sell or a buy signal just yet. It's most likely going to be a buy signal, frankly. But given that momentum is to the downside, these scalp longs are very, very, very risky. Okay, you can get like just a fat finger sell, and you're down 3%, 4%, and if you're using leverage, multiply your leverage amount to that, how much you'd be down. So it's very risky. Like I had told you yesterday, I'm looking for specific indicators on the 4-hour to kind of initiate things like that. But yeah, I'm going to continue with the daily before I even continue with the 4-hour stuff. All right, so on the daily, the RSI is in the bearish control zone still. It's making an attempt. I had told you this, I believe, for the past 2 days. As long as the RSI is down here, it's going to try to attempt to cross the slow moving average. But what I'm expecting, and this could not happen, right, is the RSI will ride up, but then get rejected off of the slow moving average to continue lower. That's my expectation. Now, expectation is not reality. So what could potentially happen as well is that, okay, the RSI actually does create a cross above the slow moving average. So if that cross does end up happening, I would like to see a back test of the slow moving average before I would even initiate and respect that cross. Just because it was freshly broken into this into the bearish control zone. So you want not only one confirmation but two confirmations. Confirmation one is a slow moving average cross up, and then a back test of that slow moving average as support. And then at that point, you can then continue with the fresh swing long position. But at this time, we're nowhere near that. We're actually contrary. We are looking more bearish than bullish. Okay, let me go to the TMA here. The TMA, same thing. TMA did cross below the slow moving average and is making an attempt to continue to the upside to try and cross over. But usually when things like this happen, we do get either consolidations, attempts to break out and hidden bearish divergences, and then a continuation of the downside. And until we see the really slow moving average kind of actually slope sideways or up, we're not going to see upside in the near future, in my opinion. As you can see, the slow moving average is sloping down as well. It's ever so slight, but that's not a good sign for overall price action. I mean, we'll probably get wicks to the upside and stuff like that. We are in a rising channel. Technically, it could be a rising channel or a bear flag, but given the bearish engulfing candle a couple days ago, I'm constituting it as a bear flag, but I digress. All right, so I am going to go. Oh, what did I just do? Okay, there, my bad. I'm going to go to the 4-hour here, move everything there. Okay, let me start with market cipher B. All right, market cipher B. Now we are seeing some curvature. It's not bad. We are seeing some curvature, but we are getting bears trying to really spoil the party. So we got a sell signal up here, then we got a buy, then we got a sell, we got a buy, then we got another sell. So even though momentum is to the upside, bears are still initiating shorts or taking profits and stuff like that at a massive degree to where it's stifling momentum. Now money flow is showing that it is curving to the upside, but momentum waves is showing that it's kind of already meeting resistance and is most likely going to head back down. Now, I had said this yesterday. My expectation here is a trigger wave. I would love to see a trigger wave. I would love to see a wave that is smaller than the previous, something like this, something like that, whatever, right? But at the end of the day, I want to be able to actually see some momentum changes. I want to see a momentum shift. Okay, and the slope of this line will personally to me indicate how strong the upside push will be. We might not get it, but that's something I would look for in regards to opening up a fresh long. Um, I did close my short, I believe, like 4 days ago, 5 days ago. I think it was like 4 days ago. And yeah, since then I've been out of the market. I'm more so looking for a longing opportunity, but I am willing to wait and basically skip this consolidation phase. I mean, yeah, there are scalping opportunities and such like that, but frankly, given how uncertain the market is and the macro environment and everything like that, it's just too risky to even kind of consider that. I'm more so waiting for a strong swing opportunity or an obvious uh, re-entry to a short position, which I had explained regarding the daily, which is as long as you see candles within this, as long as you see candles within this channel, um, I'm in a no trade. You're seeing a lot of mixed feelings, if you will, in the market. So for example, you're seeing a 9 and 21 EMA cross, while the 9 is acting as somewhat of a support, but you're getting wicks below it, so it's not necessarily getting too much respect. Also, you're in a rising channel, which is predominantly a bearish uh, pattern. You have defined support pretty much. Um, at basically 20.9, 20.8K. So if I, for example, if I see a 4-hour candle close below these lines, then I'd feel way more confident initiating a short. Now, conversely, if I see price break out of this channel, if it kind of does this, breaks out, back tests the top side of support and continues on, then I'll initiate a long of some sort. But at this time, I'm more so, I want to see everything align. Everything is kind of showing one thing or another. That's when you really should reconsider opening any spot positions or even leverage positions, because we have multiple indicators saying one thing or the next, and that's not good statistical odds in your favor. Okay, so what is going on here? Oh, I'm using, okay, my bad. I meant to click that. So I wanted to do that. So on the MACD, we are seeing histograms wane to the downside. Volatility seems to be kicking in. The lines right here, they are still bullish, but as you can see, there is curvature. Usually this is a fake out zone. This could actually curl back down. Usually with the 4-hour MACD, I prefer histograms over these MACD indicators. So in regards to the histogram, I do feel like it's kind of waning to the downside, and we're most likely to see selling pressure within the coming hours, and hopefully at the next dump point, we'll create that attempt at a higher low and kind of continue forward to maybe doing a long position. But before I see that, I am expecting some momentum to the downside. Now, momentum is different from price, okay? So you could have like downward momentum, but you could have super choppy price, okay? So that's why I must emphasize that momentum doesn't necessarily indicate price direction. Um, there's so many factors as to why that is. More so, essentially, when the histograms are green and moving to the upside above the zero line, that just means there are more buyers than sellers in this given time. But the severity of the buys and the sells could lead to choppiness. Exponential moving averages do play a huge factor into that. So if price is below the 100 EMA and, histograms are green, it's just not going to be as powerful as if price was above the 100 EMA and the histograms are green. Huge difference in reaction to price and all that kind of stuff, and vice versa. So if price was above the 100 EMA and you saw negative histograms, you're going to get a completely different reaction from price percentage movements. I mean, if price was below the 100 EMA and you see negative histograms, completely different scenarios. So just something to keep in mind. So we are seeing positive indications, but as you can see, price is below the 100 EMA. Okay, so these moves, just don't get too excited is what I'm trying to get by. All right, so I did it again. Uh-oh, bad habits. So as long as price is above 21.52, you can expect price to move to the upside. So that's something to keep an eye on. I'm going to turn this into probably a green, and I'm going to type out parameters here. What is it? 21.520. Okay, so as long as price is above there, and it's super close, guys, it's very, very, very close. Like your margin for error is 0.27%. Okay, but as long as price is above there, you can expect the price to continue to the upside. Very close margins. Now, on the MACDX, we are seeing a hidden bearish divergence continue to play out. Now, will this affect the overall trajectory? That's to be seen, because a slow moving average, even though we are getting this hidden bearish divergence, the slow moving average is still pointing to the upside. It's kind of stagnating. It's not completely flat, but as you can see, the slope, it was, trajectory. The trajectory of the slope has changed, and it's becoming a little bit more stagnant and sideways as opposed to parabolic to the upside, which is common in downtrends. All right, so man, the 4-hour RSI does not want to give up. It's still seeing the slow moving average as support. So until we see an official cross below backtest, then I wouldn't feel too cocky in regards to opening up fresh shorts. You do have to respect the bulls for maintaining support on the slow moving average on the RSI. Now, TMA is rather interesting because price did cross above the slow moving average, and it is attempting to break above the 50 line. That's pretty interesting, not gonna lie. Now, we could have some bullish divergence at some point. I like to see bullish divergences play out over time. So those are usually really, really good entries, especially on the 4-hour for longs, but we haven't had that yet. So I gotta take this as stagnation, and really the TMA as it stands on the 4-hour isn't really a good barometer. I would more so be looking at the TSI or the MACD for actual instances of resolution of some kind. Alright, so I'm going to go to the 1-hour here. Alrighty, so the 1-hour candles have broken below the 9 EMA once again, consistently have tested these the 21, the 50, and the 9, they're kind of like in a choppy range where they're not acting as support or resistance. They're acting more so as like the median line. That's rather interesting. Now here, I like to use Heikinashi. It's just more accurate in my opinion. So we are getting waning sell pressure. Waning buy pressure here. So I'm not a big fan of that, and we are getting a fresh sell signal. To me, that just indicates that we're going to see a rollover at some point, given that it is the 1-hour. And yeah, if we see the next hourly candle, which is in 48 minutes, close, and it's a flat top, then that would truly indicate that momentum will be breaking. So now that I'm zoomed in on the 1-hour, I've noticed that the heart line, which is like this yellow upward sloping dotted line, the heart line of this channel here is trying to get back tested support, I want to see if it's on the 4 hour. If it's getting respect on the 4 hour? Yeah, it's getting respect on the 4 hour, so that's interesting. Um, Usually when that happens, you'll see kind of like somewhat of a continuation up until a certain point, and it'll break back below it eventually. Um, but yeah, just something to be aware of, that the heart line is being respected at this time. Alright, so on the TSI, we did get an attempt at, oh, we are still getting attempts here. We did get an attempt of trying to cross the slow moving average, given that this is the zero line. If we actually see the slow moving average close below the zero line and just continue to the downslope, that's actually a really bearish indication. But the bulls are trying to make attempt at pivoting to the upside. As you can see, the indicator is like, fidgeting up and down as I speak. So that's interesting. But ultimately, the slow moving average is what really you should be paying attention to, and we are seeing negativity in the overall trend. Okay, so let me see here. Okay, the MACD is rather interesting. We did create a lower low on the MACD, so that's something to be aware of right there. That's not good in my opinion. I like to see trends contrary to what I'm seeing for longs. In this case, the histograms are pointing to the upside, but as you can see, the previous positive histograms were actually um, losing momentum. So what this tells me is that the bears are actually gaining momentum to the downside and the bulls are losing momentum to the downside on the hourly on the histograms, especially that the indicators are pointing to the downside as well. We are seeing some dichotomy here, but it looks to me that this fast moving MACD line is getting rejected off the slow moving average because it was sloping up and then bloop, now it's just pointing down again. Something to consider. Yeah, and as long as price is below 21.613, we can expect prices to continue lower. Just, yeah. Now, this to me explains as to why we are seeing some pumpage to the upside. We did get a hidden bullish divergence right around here, and it really played out for about 3 hours, but I don't know if you're new to this channel or if you've been consistently watching me, but I've said this a lot, like hidden bullish and bearish divergences are weaker than legit divergences. In this indicator, this actually, it's funny because this Spanish developer made this. So yeah, the R's and the O's are, yeah, so if you see like a bull with an R, that's an official bullish divergence. If you see a bull with an O, that's a hidden bearish or bullish divergence. But in this case, we are seeing a hidden bullish divergence. So usually it just means it's weak, temporary, and more so you should really pay more attention to the slope of the red line, and in this case it's heading to the downside. It hasn't crossed the zero line just yet, so yeah, it's becoming a little bit more definitive from my perspective that yeah, price will be continuing to the downside unless there's like some bullish engulfing candle that nullifies all of this momentum. Yeah, so as you can see here, the TMA is also showing a downward slope as well, with a stagnating slow-moving average. But yeah, alright, so I'm gonna leave it at that. In regards to my verdict here, as far as I'm concerned, I'm gonna stick with the 4 hour. The reason being is because these candles here, as nice to see a upward sloping trend, I am concerned that these exponential moving averages are still bearish. The 9 EMA did cross the 21, which is something I usually really like, but given the severity of this dump, given the macro environment, I'm not a big fan of any attempts to the upside until I see some form of divergence or a possible trigger wave of some kind to really initiate a good, safe and predictable long, but right now we're just in chop city. this range is, we are trading within a 5% range to the upside or the downside. We're more closer to the middle than, oversold or overbought. So this trend is already kind of mature, and I'd much rather wait for a breakout of this channel. I call it a channel, but really, like, to be safer, I call it a channel to be safer, right? Because channels, they can extend out. Um, so just for perspective, what am I doing here? Oh, I clicked the wrong yellow thing. Just for perspective, channels could last for a while. Okay. Now, bear flags are temporary. They're more shorter in length. So, because it's still a valid bear flag, but in traditional technical analysis, if this elongates and expands, it could be a channel. But yeah, I want to see a break outside of that pattern because frankly the ranges are too, I don't feel like scalping, frankly. I don't feel like scalping this move. There's just too much in my personal life to monitor stuff like that. And there's also just a lot of risk because these moves are, parabolic. Like if you zoom in like on the 15-minute, they're more it's super choppy. Like it's ridiculous. These indicators, like it's ridiculous. You in order to get like successful scalps, you'd probably have to go more deeper into like the 10-minute, the 7-minute, or the 5-minute to get like good moves in. But also you have to be very, very careful and be more conscientious of the money flow on a market cipher indicator, for example, because money flows do tell. I wouldn't, TSIs are too slow, frankly, in these slower moving attempts here. But yeah, I like to take in consideration money flow as opposed to any other indication. Obviously, like the 100-day moving average on the 5-minute is a pretty nice tell, and the money flows are a pretty nice tell as well. If you insist on scalping, not financial advice, right? But if you insist on doing that, given that this channel is super duper like tight, in my opinion, and there's really no trend to be had unless you are going super low into the, minute time frames. It's not the 5-minute time frames. It's just not a good time to be trading. And as you can see, there is whale manipulation. There are active whales here messing around. Okay, so if you see like these yellow X's, you want to get the hell out. Alright, it's just, they are vicious. Okay, you'd be like, oh my god, I have a buy signal, and then bloop, yellow X. Usually yellow X's mean that they're selling. I'll be honest with you. Or they're attempting to like break a support line, because these people who have so much crypto, they actually know what they're doing, and they're experienced veterans, and they're contrarians as well, and aware of key pivot points and stuff like that, and they have enough, Bitcoin or capital to really change the narrative of those pivot points. So just be very cautious if you insist on doing things like that. But anyway, from my perspective, 4-hour channel, keep it simple, you know, um, yeah, 4-hour channel, potential bear flag. Just wait for a breakout of the top side or the, bottom side. And yeah. All right. Well, I appreciate you listening this much. If you're still here, thank you so much. Yeah, if you haven't already, please like this, below. It's like virtual currency. So, likes are virtual currency in YouTube land. I've heard. So if you could like that, like this video, I'd sincerely appreciate it. Yeah, if you think this is valuable, please share with your trading friends. If not, no worries, no harm, no foul. Let me know what you think about the price. Do you think we're gonna break out of this channel? Do you think it's a channel? Do you think it's a bear flag? Yeah, it'd be great to hear from your perspective. All right, take care. Bye bye.